Good morning. Welcome to the inaugural HCR Horizons podcast. My name's Martyn Davies. I'm a corporate solicitor in the firm's Cardiff office, and I'm very pleased to welcome David Blake from Development Bank of Wales. He's an investment executive in the TVI team, which is the Technologies Venture Investment team, I think. Is that right, David?
Yeah, that's correct.
Excellent. So this is the first HCR Horizons podcast. So we'll be looking to run a series of these over the course of the next 18 months and looking to undertake one-on-one interviews with interesting and prominent people in the tech space. And hopefully this will be of interest to, lots of people, I suspect. Investee companies looking to raise money, investors, angel networks, all these advisors, everyone in the local eco space. So without further ado, we'll kick things off with David. Thanks very much, David, for agreeing to participate. I'd like to take the opportunity to hand the mic across and just ask you to give us a bit of a steer, bit of insight into what Development Bank of Wales does, the objectives, what it looks to do, and then we'll go into a bit more detail about your role and the TVI team, if that's all right.
Thank you, Martyn. Absolute pleasure to be on this with you today. So a little bit about the Development Bank of Wales. Our main remit is to support finance for starting, growing, buying businesses, as well as technology ventures and property development. We also look after the Help to Buy Wales scheme as well. This year we actually reached about £1.9 billion asset under management. Over the last 5 years we've invested something like £500 million into Welsh businesses, leveraging 365 million of private investment, as well as 305 million delivered through the Help to Buy Wales scheme. Broadly, we've supported 3,000 businesses in that period and supported 32,000 jobs, which we believe has an impact on the Welsh economy to the tune of about £1.2 billion. In the last year, for example, we invested directly into companies 109 million. That went into 500 companies and safeguarded 3,500 jobs. So, and we cover debt and equity for companies as well.
That's quite an impressive set of statistics. There's obviously a lot of businesses out there which are obviously reaping the rewards of not only being Welsh businesses and setting up here initially, but I also understand that there's scope for businesses to actually come to Wales to then reap the rewards and take advantage of getting investment from the Development Bank of Wales, which I understand does happen. I know we've had a chat offline about some of the success stories that you yourself personally or through the TVI team have been involved in. Are you able to give us a bit of a steer as to what some of those have looked like, the particular industries or sectors that you guys in the TVI team look at, and what benefits those are bringing to the Welsh economy and to Wales and further afield as a whole?
So if I just explain to you firstly about our Technology Ventures investment team. So we're broadly a team of 16 people, varying skills, PhDs in life sciences, backgrounds in software engineering, as well as fintech, and a number of other PhDs across our team. Broadly, we are sector agnostic. We typically see about a third of our portfolio is based in life science, a third in software, and a third in hardware. Typically, we're invested in about 40 companies every year, and that really looks like investments of about 12 to 15 million every year going into these companies. We've got a seed fund that targets very early stage businesses, and we have the ability to invest up to £250,000 into those. And then the next stage up is our venture funds, where we have the remit to be able to invest several million, typically over several rounds though, to support the growth of these technology businesses. So to your first point, we do work with companies to bring them into Wales, and I've actually had the pleasure of doing that directly myself. And I'll say, while we've got quite a large portfolio of companies with a number of successful companies within it, I'll talk specifically about the ones that I've worked with. So SpaceForge, which is a really good example of an inward investment that we were able to bring in, I think it was about 2 years ago, at a very early stage from our seed fund. And this is a company that in the next month or so will actually be launching their first returnable and reusable satellites via the Virgin Orbit launcher in Cornwall. And this is a company that we've seen grow from the initial founders to a team of 40-odd rocket scientists, literally based 2 miles down the road from where our office is. And that's a cutting-edge company that is essentially going to be enabling the ability for the manufacture of advanced materials in low Earth orbit. I mean, it's pretty out there as far as technology is concerned. Another example would be a blockchain middleware company called Finboot, who I had the pleasure of being able to bring in. Predominantly, their company was based in Spain at the time. We've been able to relocate them to Wales and grow the team here. And this is a company that is fundamentally focused on disrupting the supply chains of a number of the world's largest organizations. And it, again, is kind of leading the way as far as that blockchain sector is going, which is obviously a rapidly growing area. And of course, I'd be remiss if I didn't say CoinCover as well, who were an existing company based in Wales, but we've had the ability to see them grow to 50-odd employees in the space of 2 years, growing at an absolutely phenomenal rate, and again leading the way in the digital wallet protection space, which is makes them a category king, market leader, and absolutely amazed across those 3 companies and the rest of the portfolio, with the success that we see across these companies and the impact that has on Wales.
Thanks, David. I mean, it's great to hear that we've got these such strong businesses in Wales that are doing groundbreaking things in, to think space. I mean, once upon a time that was seen as sort of NASA territory, and there was no one in the private sector who would go near it with a barge pole, and then sort of SpaceX comes along.
I mean, space as an industry has become something that has certainly piqued a lot of people's interest. It's one that is very easy to get, I guess, excited over, because it's, a lot of the technologies that are coming out of it are going to be groundbreaking, and they essentially, it's that technology that's not going to be around in a year's time or 2 year. We're kind of talking 5, 10, 15-year horizons, and the impact that this has on Earth. And I think there's a lot of excitement around the fact that, that this is it's essentially a new frontier, and the opportunities for being market leaders in this area are vast, because the technologies are new. So we're able to position ourselves as being market leaders in these areas. And one of the things I really hope is SpaceForge, which I believe is the largest space company based in Wales at the moment, will be able to encourage further space companies to develop around them, and we'll create a cluster around them as well. And that, I guess, is what we would have seen in Silicon Valley maybe 20 or 30 years ago, when you started to see the clustering of those technology businesses, and then how it kind of span and turned into the behemoth that it really is today. But hopefully we'll be able to create the same in Wales going forward with I mean, not just space, but also the blockchain and cryptocurrency skills that we're developing, and we're seeing come along quite quickly, and as well as all the other life science stuff that we're doing.
Yeah, and to sort of link in with that, I mean, I know that there's been a massive investment made by a lot of the universities in South Wales to sort of ensure that there's a outpouring of skilled people, so that when these businesses are starting up or relocating to Wales, that there is the sort of pool of resources there to ensure that the skilled workforce is there to help these businesses flourish. So David, if I'm an early stage, let's stick with the space theme because I think that's really exciting. So if I'm an early stage space business, pre-revenue, I suspect, given the nature of the industry, based, overseas or across the bridge, and I luckily listening to this podcast, and I'm thinking, really like the sound of what David is saying around, the businesses which are here, which are, going into that sector. What, if they were thinking about coming to Wales, what should they be thinking about? What would you be looking for if you had a call from, let's say, somewhere, a business over in Bristol who was thinking about relocating into Wales with the expectation or the hope that they could take advantage of some of the funds which Development Bank of Wales has to offer? What are the sort of the key things that you would be looking for, to initially have that view as to whether or not there's scope for investment, if I can do that, if there is such a checklist?
Well, I think the obvious one to point out, and the clues in our title, the Development Bank of Wales, is that there would need to be a Welsh presence for your business, and commonly we're being asked, what does that really look like? And, in practice, that means objectively, if someone's looking at your business, can they overtly see that it is a Welsh-based business? And what does that look like for companies that we've invested in previously? Well, that looks like you've got an office or a facility that's based in Wales, and you've got a number of team members that are going to be based in that facility. I mean, it's great with space because you tend to need a facility where there's, testing and sciencey type stuff going on. They need the laboratories, so it's quite easy to have a designated space. It becomes, I think, a bit more complicated maybe for software businesses, where one of the things we're certainly seeing is a push towards software developers wanting to be working remotely from maybe anywhere in the world, so it becomes a little harder to objectify what that looks like. But in practice, there's a whole host of other kind of departments within a company that I guess could be based within our borders. And again, one of the other things that we look for is we're a co-investor, so we make up to about 50% of a round. So typically what we'd be looking for is other investors to be coming, interested in investing in the company. And sometimes, when a company comes to us, they will say, well, we've not currently got any co-investors lined up. Well, sometimes we'll be able to kind of work with them and introduce them to other potential investors in the area, whether that's high net worths or other investment funds, or they will come already with a round that's almost full, and they'll say, look, we've got a space, would you be able to fill it? And we'll be able to look at it. But I think more objectively, taking a step aside from the Welsh presence and our co-investment requirements, what we're really focusing on is, what does the management team look like? What are the skills of the management team, and is it relevant for the business that they're creating? So, for example, we're talking about space. If I had somebody who was coming from a background in financial services, who was telling me they've come up with this great idea for this new kind of satellite that was going to revolutionize the world, that's going to look a bit harder to support compared to a team of people who've come out of a previous satellite company who've already got the experience of developing it. And I can see Martyn's kind of laughing at me, but we do get examples of, I mean, maybe not quite as extreme as that, but certainly with that in mind. I mean, that said, there are ways that companies can build support around themselves so that they do have that knowledge-specific expertise within the business, and that could look like bringing a number of NEDs in around them to be able to support them with the knowledge, or working with advisors to be able to help them build that knowledge that they need to be able to demonstrate that they would be a credible management team to support.
Excellent, thanks, David. I imagine that would be very helpful for the people who are listening to this and are thinking about either pushing forward with their existing business in Wales or looking to relocate. At least part of that business to support and grow the local Welsh economy, which is great for all concerned. Yeah, thanks, David. That's very helpful. I mean, as I say, you must be inundated with applications from early stage businesses looking for funding. I mean, what are the 5 sort of common mistakes you see on a fairly frequent basis that early stage businesses make when they're sort of making contact with the development bank?
So I think firstly, when you're looking to raise money for your business, understanding the requirements of your investors is probably a very good starting point. So, for example, we are a technology investment fund, which means we focus on companies that have got a very strong technology moat. What does that mean in practice? Well, that could be strong IP, or that could be, 12 to 24 months worth of hard technical development to essentially give yourselves a head start ahead of what the competitors might look like. One of the things that becomes a lot more difficult for us when we see pitch decks and that are opportunities where it would be very easy for competitors to be able to follow you, even if it's a groundbreaking idea. If it's quite straightforward for somebody to get a template version of it and build it themselves, it's going to be very difficult for us to invest in. Another area that we typically see businesses kind of struggling with is kind of understanding what how much they need to raise and articulating correctly what the funding round needs to look like to get them through to a certain milestone. So, what I will sometimes see will be a company will say, look, we want to raise 200k now, we want to raise 200k in 3 months' time, and we want to raise 200k again at the end of the year. I think one of the things that companies need to understand is fundraising takes a lot of time and effort from the founders. And, one of the best ways to do it is just try to fill your boots when you can. Objectively, when I look at an opportunity, typically we're looking to see that the company is going to be raising enough money to get them through 12 to 18, maybe even at, in the current climate, 24 months of runway. And that will typically be straight burn as opposed to taking into account any prospective revenue that a company might make, I guess, depending on the stage and the level of certainty that revenue can be predicted. But that would certainly be an area where companies tend not to think so much about that kind of longer term picture. Then I guess one of the other points is companies being able to demonstrate that there is a sufficient and compelling enough reason for them to have the service or product that they're offering. I mean, I think it's quite easy to have that kind of eureka moment and think, I've got this great idea, but actually validating whether this is something that people not just want, but are actually prepared to pay for, that is obviously a very subjective area, certainly at an early stage when you might not have an MVP even, or maybe even a demo of what the product or service might look like. But there are other ways that this can be quantified. I guess that would be through talking to prospective customers and confirming that there's an interest in the product or not. And then I think I kind of alluded to it before, but one of the main points is underestimating quite how long it will take to raise funding. We typically get companies that come to us and say, I need funding last month, or it's almost an immediate requirement. And in practice, we advise companies that in a smooth sailing situation, it could take typically 3 months end to end to get through the introductions through to the completion and the transfer of money. And that I think can be a bit of a surprise for people, but there's quite a lot that needs to happen in that process, and sometimes it can be quicker, but other times it can also be longer, and there tends to be a couple of hang-ups, areas where there can be delays, and certainly in the first stage where you're kind of waiting for the term sheets to be issued and you're trying to bring a number of parties to the table at the same time, there can be a lot of wrangling around that stage to be able to get to a term sheet that is acceptable to all participators in the round. And then typically there's a due diligence phase that's a bit easier to predict, subject to there being any kind of really big curveballs. And then typically there's a legal process phase where that can be the timings for that can be very subjective depending on who's involved with the transaction and how many solicitors are involved. From the development bank's perspective, we work with a pretty standard templates for our legal documents, which can speed up the process. But sometimes when we're working with solicitors who are not used to working on kind of complex investment deals, there can be a lot of pushback or time wasted in those stages. So, I would say having good legal advice for the companies, good counsel during that process will help speed things along, much more quickly than you would have thought.
Good. I mean, I can firsthand confirm that the Development Bank of Wales investment documents, certainly for TVI, are some of the most generous to the investee company that I've ever come across. And I'm confident in saying that because I was one of the people involved in drafting those those documents in a previous life. So no, they are very generous. And as you say, I mean, I guess the expectation that investee companies just come along and that the check is written and the deal is done is, it just doesn't happen. And I strongly suspect that it's the businesses that come along with the expectation that the cash is going to be freely available and is going to be provided, a month earlier because they're really up against it, are probably likely to be the companies where once you start doing the kicking of the tires and the commercial and legal DD, are probably going to have the most issues, and therefore the longer drawn out process is certainly my experience when dealing with early stage businesses looking to raise. Okay. You touched on earlier that Development Bank typically they always invest alongside others, whether that be angel networks or other venture capital outfits or funds, other venture capital funds in the market. Who do you typically see in the Welsh market, David? I mean, not just who invest alongside Development Bank of Wales, but I suspect those who do invest in the Welsh market will typically co-invest alongside you guys because you've got the local presence, you've got the knowledge of what's happening in the local market. But who do you see sort of, because I know that obviously in the bigger English cities and London, there's a wealth of funds out there, but in Cardiff or in Wales generally, there isn't that sort of abundance of venture capital funds here. So I think it would be interesting for people to understand, who else is potentially looking in the market and who could be looking to sort of co-invest alongside Development Bank of Wales.
The markets in the venture capital markets in London are almost frenetic. I mean, there seems to be so many funds kind of popping up all of the time. I mean, in Wales, there are significantly fewer participants in this kind of investment stage of businesses. And I guess depending on whether we're talking seed or kind of the later stage ventures, but certainly at the seed stage, the majority of people that we're seeing participating here will be angel networks. I mean, fortunately, DBW, we have our own Angel Invest Wales platform where companies are able to be kind of promoted across the angel network that we have here in Wales, which is it's great for them to be able to access that kind of network of high net worth individuals, as well as typically we'll be investing alongside other angel syndicates and other EIS and SEIS funds. I mean, they tend to be a lot more fortunate. They are not necessarily regionally disposed in the same way that we are, so they can deploy capital wherever. And one of the things we try to do with companies that we're trying to invest into is providing those introductions to suitable funds that will be based probably in Bristol or Manchester in a number of cases. And then, I mean, moving into the kind of later stage stuff, though, once we've got companies that have got the traction and have got that kind of market interest, actually what we've seen more recently is a number of large US funds actually kind of stepping in and participating. And, I think that's really a result of COVID. I guess that kind of 2-year period where all venture capitalists were taking their meetings via Teams or other video conferencing facilities. I'd suddenly it feels that it's kind of opened up the world to funding, and I guess in the kind of wider context of US valuations being very high, I guess in theory UK valuations look cheaper. And I guess that same thing could be said in some regards between London and Wales. So I guess what we're seeing slowly is kind of capital being reallocated. But as you said, I think a number of VCs quite like the ability to be able to co-invest alongside us, especially because of our knowledge of the area and the ability to be able to bring a company in and, especially if it's an inward investment, and get them settled and introduced to the people that they need to within the networks. So,
yeah, thanks, David. I mean, it's good to know that there are, Little Old Wales is on the radar for some of the big VC funds over in the States, which is, I think that's a lot of credit has got to go to the sort of Welsh Government and Development Bank of Wales in sort of persevering and almost having the whole startup market on your shoulders for so long. And now it's getting the sort of much wider recognition, which is great to see. I mean, talking about the US and what's happening at the moment, I mean, I was reading an article in the FT last week talking about, valuations and down rounds and what's happened with Klarna and on their latest fundraise. And with the prospect of a recession looming, is now the time when VCs are looking at, their investee companies and possibly reevaluating it, looking at those valuations and maybe taking a step back, dropping those valuations down, given what's happening in the wider global economy. Have you seen any of that sort of happening or not?
Yeah, I mean, absolutely. I think the first 6 months of this year, we've definitely seen valuations coming down quite significantly. I mean, everything always lags a bit behind the public markets. I think initially we saw that private prices were standing up quite well compared to the public markets, which I guess started to drop off around Christmas time last year. But what we've slowly started to see is the private markets slowly coming down, and then as that kind of trickles through, lower kind of price earnings or revenue multiples that we'd typically be looking at. We're definitely seeing a bit of a pullback from those kind of racier valuations. And I mean, I think Klarna was a great example of a reset. And I think what we've seen is a bit more nervousness around these kind of racier valuations. But I think where there's companies that are performing to the levels that are very, very, very fast growth, I think what we are still seeing is the appetite to support those at those kind of valuations. It's not really an issue because there's only, there's very few of those companies that are growing in the markets that are particularly attractive to these VCs. And one of the things we do know is at the start of this year, more money had been raised by VC funds than ever had been before, in any year previously, I should say, rather than at all. But they seem to be sitting on it and using it as dry powder, waiting for the right opportunities to come along. And I think one of the things that we have seen this is VC funds are typically looking to support their existing portfolio. So the investments are still happening, but they're happening into their portfolio companies as opposed to new investments. I guess the interesting thing about the development bank and TVI's remit is that we are still deploying capital at an incredibly fast rate, and we are, I think, pretty busier now than we have been 12 months ago, and I think that is probably a result of seeing that opportunities are, I guess, not necessarily being funded by, it's less competitive in the market, I think is what we're seeing. And just to my point earlier about valuations decreasing, there is also a lag then between what we're seeing founders valuing their companies at compared to where investors are looking to invest in their companies, and that can be a bit of an area to trip up. So if I give you an example, we can, what will typically happen is somebody will say, oh, look, I found a comparative company that was in Silicon Valley. It raised 5 million, 20 million pre-money, and it's got no revenue. Well, I mean, in practice, while that might have happened in that one story in isolation, it's a lot harder to really see that it would be supported by investors in this country. And what I always think of is, it's actually the price you're going to get, the pre-money valuation or the amount that you're going to raise is going to be an element of supply and demand. You're going to talk to a number of VCs. They're going to give you the prices that they think is right. You know how much you need to raise, and at some point you're going to find that perfect spot where it works. And I guess what you don't want to happen is set your price so high to begin with that you're in a position where you can't fill your round, which is another example of a reason why it can take a long time to close an investment round out, because you're still waiting for those other investors to come along, and not responding quick enough to the fact that the markets have changed. I guess could leave you in a situation where you're still trying to raise funds. And I think that's probably likely to have happened to companies that have started to raise perhaps in the last 3 months, where they're in a position where they still have the kind of historical evidence that they should be raising at a certain valuation, but they're not finding investors quick enough to be able to close the round out.
Yeah, I think valuations is always a tricky one for founders. And yeah, as you say, looking back at historical evidence is helpful, but when the market's moving fairly quickly and different geography, then it makes it very difficult. So yeah, I think we could have a separate podcast just on valuations, to be honest, and the issues that people have. But no, that's very helpful. Well, thank you very much for being the guinea pig and coming along to be the first participant. It's been an absolute pleasure to listen to your insights, and I'm sure hopefully those listening will reap the rewards and take a lot from it. So yeah, thank you very much, and thanks for hosting at the very nicely refurbished Development Bank of Wales offices. So I'd suggest for those investee businesses out there, you should come and have a look. And again, if people have got questions from any of the content that we've put out on this podcast, then feel free to reach out to me, and likewise to David. I'm sure we'd both be happy to take any questions. So thank you very much, and we'll no doubt be in touch with episode 2. Keep listening.